Hello everyone, it's my pleasure to welcome you to this presentation. My name is Francesco Rossi. I'm a lead software engineer with the Upper Finance team here today to show you our brand new software application called Business Plan for Startups, which is already available on our web cloud computing platform. This new software is an advanced tool to help you draft financial forecasts complete with automated reporting to complement your strategy, marketing, and operations plan. The rules of the game for this software are pretty simple. You enter the financial assumptions for your business project, and the system is gonna draft the financial statements for you. What kind of assumptions? Well, basically, you have to enter what you are expecting from your business project in terms of revenue, how much it's going to cost you, both in terms of operating expenses and capital expenditures, and where you can get the money from, in other terms, the funding sources for the project. Once you have entered all this data or this input data, the system puts all this information together and generates the financial plan for you, starting, of course, from the pro forma financial statements, balance sheet, income statement, cash flow projections, and adding up a series of analysis from the most basic ones. Think about the accounting ratios, for example, to the most advanced analysis. Think of enterprise value, payback period for your investment, internal rate of return, and so on. So no time wasted here. I'm going to show you how it works right away. Just give me a second to share my screen, and I'll let you see the application. Okay, we're ready to go. For those of you who already use our products, and for those of you who don't, this is our new standard user interface for our programs. You get this left sidebar where you can find all the sections the application consists of. You got this in the upper right corner right here. You get this toolbar where you can perform various tasks, from the most basic one, say project, close project, save as, to the most advanced functions. For example, this is a very interesting function here. Is the scenario analysis. I'll talk about more in detail about this very interesting function later on in the presentation. But first thing first, let's start from the settings. Apart from some general information that you are required to enter, couple important things here. How many years your plan is going to last, from 1 year up to 10 years of financial plan. I've already entered some input data, some input assumptions in this project, just for the sake of the presentation. I'm assuming to simulate a car manufacturing company. Second important thing you can choose right here is the level of detail you want to work with. Choosing between annual or monthly. You can handle with a monthly level of detail up to 3 years of financial plan. In this presentation, from this example, I've chosen to work with the monthly level of detail for the first couple of years of the plan. By choosing a monthly level of detail, you will be then required to enter your assumptions on a month-by-month basis. This will get you some reward, of course. This will give you a more detailed and precise monthly forecast for all the output results generated by the application. Or you can decide to work from year one with an annual level of precision, just by choosing the option none in this drop-down menu. The system will nonetheless generate all the output results either annually and monthly. Let's take a look now at how the input data are entered. To start entering our assumptions, just click here on the input item on the left sidebar. First of all, you don't necessarily have to enter all the input information following the order they are presented here in the menu. You can start pretty much where you want. In this presentation, I'm going to start from revenue and cost projection, for example. Bear in mind that this process of entering the data is always a try and adjust process. So I'm gonna, for example, enter some revenue costs, see how the operating cycle works, see the projection, the cash flows, how they work, and then possibly enter some more funding or some more credit lines. I'm going to start from the revenue right here. To enter revenue, you first have to choose the mode in which you can enter such quantities. You can choose between and directly enter the amount of revenue projected for every month and year of the plan, or you can enter, as I did in my example project, based on a price quantity model. I mean, you can enter the expected price and the expected quantities to be sold and the sales price. You can also define some revenue categories. Assuming to simulate a car manufacturing company, I created some categories related to the most common car segments here. This is totally optional. It's up to you whether entering this kind of information or not. This will allow you to have a better grasp of where your revenue streams are coming from. The actual process of entering the projected revenue takes place here in this revenue forecast page. As you can see, I've entered a couple of revenue lines that I call car A and car B. You can work with multiple revenue lines, or you can enter your revenue, expected revenue, all single line, everything on a single line. Just bear in mind that associated to each revenue line are some parameters like category, sales tax rate, or the day sales outstanding here that are uniquely associated to your revenue line. So if you want to differentiate your revenue stream, if you want to have better understanding of where your revenue streams are coming from, or if you need to differentiate some parameters like sales tax rate or day sales outstanding, you will need to enter multiple. The actual entry of the projected amount takes place in this area for the first couple of months that I handle on a monthly basis. Just click this little pencil icon. This window will pop up, allowing you to enter the expected quantities to be sold and expected sales price for each and every month, in this case of year one of the projection. For year, same thing, of course, for year two. For years 3 to 5, I've entered the total quantity, the total amount of quantities expected to be sold over the course of the entire year. And this is kind of an average price expected to be applied to the quantities to be sold. One more point, enter your revenue data strictly according to the accrual principle. I mean, this 90 million revenue projected here of year 3 would be recognized in the income statement of year 3. When it comes to cash flows, the parameter that will dictate when the cash inflows will take place is this one, the DSO. For example, this 4 million revenue projected for January 24, if you have DSO equal to 0, will be cashed in the very same month of January 24. If you have, like entering example, 60 days, sorry, day sales outstanding, this $4 million will generate a cash inflows in the month of March. Let's take a look at the cost page. You can set some cost categories, which in the example in plan 1 and plan B, just to again arrange your cost lines and to categorize them in order to have a better understanding of where your business is going, and then go to the cost forecast. The model to enter the projection of costs is very similar to that of revenue. You can enter multiple cost lines, or you can work, in this case it's not probably so possible, you can enter with an only cost line. For each cost line, you will have to enter some parameters similar to those we saw during the revenue entry, the sales tax rate, DPO, and you're gonna set some additional options here for each cost lines. You're gonna choose whether it is direct cost that would be recognized in the cost of sales, or it's a general expense that would be recognized after the gross profit. Then you're gonna choose whether this cost line is made up of fixed costs or variable costs. This will allow the system to generate another very interesting table charts, which is the contribution margin income statement that will give you the contribution margin, of course, for the company. For the first couple of years, I chose, remember, to work with an annual, with a monthly level of precision. I'm gonna enter the projected amount of costs for each and every month of the first year and the second year. While for the remaining years, I enter the total value cost expected from years 3 to 5. Labor costs is the next page we're going to see. Very similar again to the page relative to the cost entry. The only difference here is that you will have to split your labor costs into a couple of components: the net pay and the overhead in terms of tax and welfare expenses. As you progressively enter your input assumptions, the system automatically, real-time, generates all the output results. For example, we can start taking a look at the projected income statement for your business operation. Right here, this is the pro forma income statement compliant with the GAAP accounting standards. It's generated for each and every year of the plan, for each and every month of the plan. In this table chart, you have these little tabs right here, allowing you to browse from one year to another and to see how your financial plan is going to unfold over the course of the years. Let's get back to the input assumptions entry, and let's take a look at the remaining sections. The asset sections, as you can understand, allows you to plan for your capital expenditures. Of course, in this case, you can enter a multiple asset line. For each line, you will be required to set some parameters, like, well, what asset we're talking about here, classic property, plant and equipment, for example, or other tangible or intangible assets. The amount, of course, sales tax if applicable, month and year of purchase. These two other information right here are related to the depreciation or amortization cost. If you select direct cost here from the drop-down menu, all depreciation costs in this case will be recognized to the cost of sales, while if you choose general expenses, like exactly as we saw with the cost entry, will be recognized in the operating general expenses after the gross profit. This drop-down menu right here allows you to handle your depreciation or amortization costs as well. You can choose the automatic mode if you want the system to automatically calculate the depreciation year by year. All you have to do, all you have to enter in such case is the number of years of expected life for your assets. Otherwise, you can choose the manual mode and enter pretty much as you like the expected depreciation and amortization costs for all the years of the plan. Let's take a look at how to project, how to enter funding sources. Of course, in your financial plan, you can provide for equity funding sources, long-term funding sources, long-term debt, or short-term debt in the form of credit lines. The process of entering the equity sources is very simple, very similar to what we've seen before. You can enter the proceeds from the issued capital right here in this area, starting, of course, from the initial drafted capital. First couple of years, again, click the pencil icon, enter the information for every month of year 1 and year 2, and the total amount, total yearly amount for the remaining years, 3 to 5. You can also share some dividends right here on this plan for the distribution of dividends across the financial plan. Debt capital is entered here in the form of long-term loans. You got 2 modes, in automatic and manual. In the automatic mode, you're gonna enter some parameters, the amount of the loan, the issuance amount, the issuance year, the interest rate, the duration of the loan, the number of year installments, and the system will automatically generate the payment plan, calculate the installments, calculate the principal and the interest, and to start. You can enter multiple operations, of course, right here, just by clicking this icon, this little icon right here. If you choose to enter the long-term loans in the manual mode, the system does not calculate any payment plan for you. You're then supposed to enter for each and every month of the plan, for each and every year of the plan, the principal and the interest applicable to your loans. Credit lines is a short-term debt. We've implemented a couple of automatic credit lines that you can activate. One is called cash credit, the other one is called cash advances. Cash credit basically compensate possible negative projection of cash at the end of each month or at the end of each year of the plan, always within the limit of the credit limit you set. All you have to do is to enter your credit limit for your financial plan and the interest rate, and the system will automatically calculate all the quantities for you. Cash advances is a different type of line of credit that allows you to cash in your revenue lines immediately when the sales have been made. So if you have some revenue lines with, let's say, 30, 60, 90 DSO, you can activate the cash advances credit line, set the credit limit and the interest rate, and the system will automatically advance the cash inflows for you. Of course, this will generate a short-term debt, and this will generate interest expenses to be paid. Let's take a look at the remaining input section right here that allows you to simulate some other business events in the form of additional income and expenses, financial income, non-operating income expenses. You can edit some parameters here like the income tax rate, or apply some adjustments to the taxable income, which is automatically calculated by the application. You can plan for your inventory using 2 alternative methods. You can choose the method that we call months of inventories and enter. This is actually 6 months of inventories. It means you're going to have 6 months of cost of sales worth of inventories. Or alternatively, you can enter the amount as you like in terms of the expected amount of inventories at the end of each month for the first couple of years, at the end of each year for the remaining years. For all this effort, you're gonna get all these output results, output table charts right here, which are automatically generated by the application as you progressively enter your input data. Let's take a look at all the table charts generated by the application. As I said before, you will get, first of all, the pro forma financial statement. So pro forma balance sheet, complying with the GAAP accounting standards. This is the annual version. You're going to get also monthly version right here. And the system, like I said, will provide you with this kind of analysis month by month, even if you don't choose to work with the monthly level of precision in your input data. Then you have the pro forma income statement, which we've seen before. Next step is to reclassify the balance sheet and income statement. Concerning balance sheet, we have a couple of reclassified table charts right here. The first one is based on a financial criteria, based basically on the time maturity of the assets of your assets and liability. Every table chart is often accompanied by some nice graphs like this one I'm showing you. Then you get the functional balance sheet, is another template of reclassified financials. This is based on a more functional criteria, separating the operating assets from the non-operating financial and non-core assets. This is very useful because it will allow you to calculate some very interesting figures, very relevant figures like net operating working capital, the net working capital, the capital employed, and so on. Then you have the cash flow projections. Very important, very significant in your financial projections, because you want to make sure of one thing, first of all, that the projected cash at the end of each month and of course at the end of each year is going to stay positive. It has to stay positive. Otherwise, the financial plan is not viable. We have a couple of templates of cash flow statements. One is based on a direct method, where all the inflows and outflows are directly reported in the statement, separating the cash generated by the operations from those generated by the investment activities and the financing activities. Then you have the indirect method, where the starting point of this financial statement is a figure that typically, and there is the bottom, there's none other than the bottom line of the income statement, profit loss, which gets adjusted for all the changes in net working capital and gets adjusted further by the cash flow for investing activities. The bottom line is always the same. You get this total cash flow as the difference between the total cash inflows and total cash outflows, and the cash and cash equivalents projected at the end of each month and at the end of each year. Then you get this aggregate template and this nice little graph right here. Working capital analysis, simple table charts detailing the working capital for each year, for each month of the plan, the net operating working capital. And another interesting analysis, the cash conversion cycle. Based on the average days inventory, days sales, and days payable outstanding, the application calculates this cash conversion cycle, as you see in the formula. And so to quantify the average time the company takes to cash in from sales after it's paid for its current costs. Then we have all these other output table charts. This is the focus, the specific focus on the trend of financial debt, both in terms of total financial debt and net financial debt. There is none other than total debt minus the cash equivalents. Then we have this nice little table chart focusing on the cash credit, cash advances, the famous short-term debt, the short-term credit lines that we've seen before. In this project, I decided not to activate the cash advances, and this is the reason why I roll all these figures to zero. Analytics, annual and monthly, as always. These are based on the revenue and cost categories I've defined before, so they will let you understand where your revenue coming from, where the costs are coming from. And you will find here the cost segments that I previously defined. Financial ratios is a simple accounting ratios, very basic calculations, but can provide very useful information on the level of performance. You get all possible kind of financial ratios from the income statement to profitability. For example, the classic return on equity, return on capital employed, return on invested capital, and so on. As you can see, for each every ratio, the value is calculated, is evaluated according to some standard parameters, which, by the way, you can edit in this advanced option sections right here. You want to edit these parameters, especially for the profitability ratios that are better illustrated. Then the application also implements some third-party models to evaluate the expected credit rating of your business project based on various models, standard classic Standard & Poor's, Altman Z-score, coming in the form of the standard model, but also in the form of some adjusted models that are being released on through the year. Then you get some of the credit ratings in the form of the Tafler's model. They're all a linear combination of financial ratios leading to an evaluation in terms of safe zone, gray zone, or distress. Then one of the most interesting section we have implemented, this is not third party, this is something that we implemented, but it's pretty classical analysis. This is called financial analysis, leading to the calculation of the enterprise value of a company. The enterprise value of a company, of your business project, is the net present value of the expected free cash flows generated by the project. These free cash flows are discounted at a specific discount rate, which is the weighted average cost of capital, or WACC if you prefer. You can edit the parameters based on which the WACC is calculated. One thing that we really want to implement fairly soon is a sort of database automatically setting all these parameters for your industry and for the country. In this initial version of the software, these are just default values. You can enter all this data. The whole purpose of this financial analysis page, as I said, is to calculate the WACC and apply this discount rate to the free cash flows to the firm generated all through the 5 years of the plan. You can set some options, so like applying a relevering on the beta, or to include the terminal value in your calculation. Bottom line, you get this enterprise value. It's positive. The project will generate value for the shareholders. We got these 44 million figures approximately generated all through the 5 years of the plan, and a stable 72.6% internal rate of return. Payback analysis and the STR. This is not based on discounted cash flows. This is just how many years will it take for the company to pay back for the investment we made. As you recall, we made some approximately in excess of 10 million investments. These are sales tax included. This is the reason why we have this figure right here. For the current version of the project, payback period is 3 years. The investment is going to be paid back in 3 years. Then the DSCR is another very useful ratio that it's basically measure solvency. Okay, so let me tell a couple of things about the scenario analysis. At this point of your project, you typically want to stress test a little bit your assumptions, or to conduct a what-if analysis. Let's see what would happen to our profit, to our income, to our cash flows, to our enterprise value, if the assumptions are not going to be what we expect to be. And this happens in all the cases, of course. We've implemented this really interesting function for scenario analysis, which you can access by clicking this little icon right here. It's called scenarios. What you're going to do is this. I have named the current version of the project, basically what I've shown you so far, the base projection of my business plan. Then I'm going to enter some alternative scenario, a more optimistic one, maybe a more pessimistic one. You do this just by clicking this icon right here, giving a name to the scenario, and deciding whether or not to copy the data of the current version of the scenario to the new one. I did just that before this presentation, and I created a couple of alternative situations that I call best case and worst case. If I click on best case, the application brings me into a sort of alternative project, alternative reality, where you can edit each and every parameter, each and every figure of your input assumptions. So to conduct a sort of stress test of your assumptions. What I've done in this project right here in this best case scenario is to assume that this company is gonna sell as many as double the quantities for each and every month, for each and every year of the financial plan. In the worst case scenario, instead, I've assumed to cut in half the expected quantities to be sold, expected cards to be sold. When right now we're here in the best case scenario, you're gonna get all the input, all the output results, all the output table charts from the pro forma financial statements right to the enterprise value all over again. Okay, so you're gonna get some different results. For example, if you go to the financial analysis page, we're gonna get a totally different enterprise value. This is the best case. We expect the enterprise value, of course, to climb significantly. Of course, I'm oversimplifying the assumption. I'm just enter some sample data for the sake of this presentation. And what's more interesting here, lo and behold, you can access the scenario analysis page where the results you can obtain in every alternative scenario are compared against each other. So you have a table chart detailing the earnings. You're gonna have a base projection comparing directly with the results obtained in the best case, the results obtained in the worst case. So we can compare earnings, cash flows, other relevant data, typical financial ratios, right to the enterprise value. And we discover that of course, the best case generates the most value, while the worst case has a negative NPV, so is not convenient at all to develop such kind of project. All right, another interesting function, and then we're approaching the end of this presentation. Just let me go back to the base projection version of the project. What if I wanted to extend my 5-year project, my 5-year projection to 10 years? Well, the easiest way I could do this is to just select 10 years as the length of forecast and keep on entering all the data the exact same way I did for years 3 to 5. This will require me to, of course, enter projection of revenue costs on an annual basis from year 65, 6010, sorry. Or alternatively, you can use a sort of an advanced function that we have implemented. Take a look at this option right here. If you set the length of forecast to 10 years, keeping the length of an analytic forecast to just 5 years, the input will work this way. Just let me go to the revenue forecast page. For years 6 to 10, you will be now required to enter for each revenue line, for each cost line, the growth rate, just the growth rate, the annual growth rate year over year for your quantities and for your prices. For the costs, the process of data entry is kind of similar. You get a little more, you get a little difference here. For the variable costs, you're gonna enter the percentage of the expected amount of cost to total amount of revenue. 35% right here means that this first cost line, the production costs, are expected to be 35% of total revenue for 2029. For the fixed cost, you're gonna enter the growth rate year over year. Here, I'm assuming that this third cost line is expected to increase at rate 2% every year from year 6 to 10. This is just a way to speed up a little bit the projection of your financial plan from year 6 to 10, of course. And of course, as you expect, you're getting now all the Apple results, all the Apple table charts over 10 years project instead of just 5 years. At the end of the data entry right here, you can always actually you can download the report in every moment you desire, just by clicking here on the toolbar, this download results icon. You can export your results to Word file and generating the financial plan. I'm going to show you. I previously downloaded the file, and I'm going to show you. You can export your data to Excel spreadsheet. I'm going to the docx file, including all the output results that I've shown you before. Here, complete with graphs, all the charts, and all the data that you've seen before. At the same time, you can export your table charts to an Excel spreadsheet, detailing all the, in this case, we implemented so far the output results of your plan. Okay, now I'm going to wrap up this presentation. Just let me deactivate the screen, sharing the screen here. Okay, what's next? We're going to implement a couple of interesting functions on the software. The first one is a function, an advanced function that will allow you to edit each and every item in the projected balance sheet and income statement. It will be a sort of an accounting entry system that will allow you to simulate actually every business event having an impact on the financials. One other interesting thing we're going to implement is some Excel templates where you can enter your data. So to speed up the entry process, or a user-friendly environment, they upload all this data to the platform, and you're ready to go. Apart from the possible update on this kind of application that will be released pretty soon, we're expecting to develop a couple more very interesting software applications. One would be a business plan for already operating companies. One other would be a business valuation software application through which you can basically evaluate the value of your company based on some different methods. Okay, we come to the end of this presentation. If you have any questions, comments, suggestions, or you wanna request a trial version of this application, I kindly invite you to send us an email at sales@applefinance.com. I repeat it, sales@applefinance.com for written FOR as number. I thank you very much for your attention, and I really hope this application can be useful for you and can help you translate great business idea into profitable venture. Stay tuned, stay connected for more news on our products, on our company, and have a great day. Thank you.